In one American state, the average homeowner insurance bill hit $14,000 a year. That's more than a lot of people's car payments, their groceries, and their utilities combined. And if you own a home in that state right now, you probably can't sell it because your house is worth less than what you owe on it. But that's only one of the 5 states on this list. In another, property tax bills spiked over 100% in a single year for entire neighborhoods. In another, home prices crashed 25% and they're still falling. And the state at number 1? It's the one millions of Americans moved to over the past few years. Turns out they walked straight into the most expensive trap in the country. If you own a home in any of these states, this video could save you from a 6-figure mistake. Subscribe if you like keeping your money. Let's get into it. Number 5. Illinois. Illinois doesn't trap you with hurricanes or wildfires. It traps you with a bill. The state carries $143 billion in unfunded pension debt, the only state above $100 billion, and guess who's paying for it? Property taxes here run at a 2.07% effective rate, second highest in the nation. The average annual bill sits at $6,285, more than double what homeowners pay in most of the country. But here's what turns expensive into trapped. In 2025, Cook County residential tax bills jumped 16.7%. That was the largest single-year increase in 30 years, and it hit 1.2 million homes across the Chicago metro. On the west side, neighborhoods like West Garfield Park saw bills spike 133%. North Lawndale nearly doubled, but it gets worse when you see why. Remote work emptied out the office towers downtown, so hundreds of millions in commercial property value vanished, and that entire tax burden shifted onto residential homeowners. 80% of Chicago's property tax levy now goes straight to pensions. Then State Farm announced a 27.2% insurance hike on top of it, affecting 1.5 million policyholders. Illinois has lost 548,000 people in the past decade, and every person who leaves pushes the burden higher on those who stay. That's not a housing market. That's a death spiral with a mortgage attached. But the next state sells itself as the escape from places like Illinois. And that sales pitch might be the most expensive lie in American real estate. Number 4. Texas. No state income tax. That's the pitch. That's what fills the moving trucks heading to Houston and Dallas and Austin. But Texas has the 7th highest property tax rate in the country. The median bill just crossed $4,200, and the state collected a record $125 billion in total property taxes last year, a 160% increase over the past decade. And that's before the insurance situation. Premiums jumped 21% in 2023 and another 19% in 2024. Some homeowners saw their bills go from $2,000 to $10,000 in a single renewal with 0 claims filed. Texas leads the nation in hail events, over 1,100 in 2023 alone. Total weather claims hit $28 billion that year. Roof replacements now run $20,000 to $30,000. 1 in 6 Texas homeowners has dropped coverage entirely because they can't afford it. But the real damage isn't in the insurance bills, it's in the home values. Median sold prices peaked at $538,000 in May 2022. By January 2025, they'd fallen to under $400,000. That is a 25.7% drop, almost $140,000 gone. Redfin named it the slowest housing market among the 50 largest metros, with 128% more sellers than buyers. If you bought at the peak, you are underwater and stuck. But if Texas surprised you, the next state is where the housing market completely breaks down. Number 3. Louisiana. Louisiana holds the worst title in American housing. Highest percentage of seriously underwater mortgages in the country. 10.7% of all mortgaged homes owe at least 25% more than they're worth. In Baton Rouge, that hits 11.7%, worst metro in America. In Lake Charles, One zip code has 28% of its mortgaged homes seriously underwater. But here's the part that should make you angry. Louisiana also has the highest poverty rate in the nation at 18.7%. And that poverty is exactly what makes the next number so devastating. The average home insurance premium runs between $11,000 and $14,000 a year. On the state's median income of $61,000, that's 18% of your gross earnings going to insurance alone. In Jefferson Parish, the state's insurer of last resort charges $17,623 a year, which eats 31% of the median household income. 12 insurers went insolvent between 2020 and 2023. Hurricanes. Laura, Delta, Zeta, and Ida inflicted over $115 billion in damage. For every $100 insurers collect, they pay out $159. The math hasn't worked for years, and it's getting worse. Louisiana has lost 84,000 residents and $2.3 billion in taxable income since 2020. People aren't leaving because they want to. They're leaving because the economics of staying have become impossible. If this video is opening your eyes, hit subscribe. I cover the real numbers behind American housing every week, because the next two states are where it gets personal for a lot of people watching right now. Number 2. California. Every other state on this list has one or two forces trapping homeowners. California has 3, and they stack on top of each other. Lock number 1 is the mortgage rate. With a statewide median home price near $860,000, a homeowner who locked in at 3% during the pandemic would pay $1,500 to $2,000 more per month at today's rates just to move into the same kind of home. Lock number 2 is Proposition 13, which caps property taxes at 1% of the original purchase price. Someone who bought in Los Angeles in 2005 might be paying taxes on a $400,000 assessment, while the home is now worth $1.2 million. Selling and rebuying would triple their tax bill overnight. That's pushed the median homeowner tenure in LA to 19.4 years, the longest on record in the country. Lock number 3 is the insurance collapse. 7 of California's 12 largest insurers pulled back after years of catastrophic wildfires across the state. The FAIR Plan, the insurer of last resort, now covers over 555,000 homes. The January 2025 Los Angeles wildfires destroyed 12,000 structures and caused $46 billion in damage. State Farm faces $7.6 billion in projected losses from those fires alone. Now here's where the 3 locks combine into something no other state can match. Moving to an equivalent California home costs $30,000 to $50,000 more per year. That's the math. California has lost 1.47 million domestic residents since 2020, but the ones who remain are disproportionately the ones who cannot afford to leave. And this brings us to number 1, the state everyone moves to. The state that was supposed to be the answer. Number 1. Florida. For years, Florida was where you escaped to. No state income tax, sunshine, beach towns. Between 2020 and 2022, over 300,000 people a year moved there. But the Florida they moved to no longer exists. Home insurance now averages $5,300 to $7,100 a year statewide. In Fort Lauderdale, the average is $8,347. Add flood insurance and coastal homeowners pay north of $15,000 just to keep a policy active. More than 30 insurers have left, gone insolvent, or pulled back since 2020. Citizens, the state insurer of last resort, swelled from 421,000 policies to over 1.4 million. An estimated 15 to 20% of Florida homeowners now carry no insurance at all. And that's not even the worst part. Home values are dropping while the rest of the country is still climbing. Cape Coral prices cratered 15% from peak. 11% of mortgaged homes there are underwater. Tampa posted 13 straight months of annual declines. Condo prices fell 6.1% statewide, with 92% of major condo markets declining. But the condo market has its own separate disaster. After the Surfside Tower collapse killed 98 people, Florida mandated structural inspections for older buildings. The result? Special assessments of $10,000 to $400,000 per unit, hitting owners who had no idea their buildings were underfunded. Many face a choice between paying six figures they don't have or selling into a market where buyers see the assessment coming and run. Net migration to Florida collapsed 93%, from over 310,000 in 2022 to just 22,000 in 2025. CoreLogic shows Florida homeowners lost an average of $37,400 in equity, the worst of any state. Florida isn't the escape anymore. It's the trap everyone walked into, and the door is closing behind them. You just watched 5 states where owning a home went from the American dream to a financial prison. Skyrocketing insurance, collapsing values, crushing taxes, and a mortgage lock that keeps millions of people frozen in place. Subscribe so you see this stuff before your real estate agent doesn't mention it. And if you think the homeowner trap is bad, wait until you see what's happening to renters in these same states.